champagne flows on a $400 million yacht anchored off Monaco. Inside, tech moguls and oil barons toast another record year, while their accountants work magic with numbers that would make Houdini jealous. Last April, while you scrambled to file your taxes and hand over chunks of your paycheck, Jeff Bezos paid 0 federal income tax, not a reduced rate. 0. Warren Buffett's tax rate? Lower than his secretary's. This isn't about political sides or moral outrage. This is about a shadow financial system where the ultra-wealthy play by completely different rules. Rules written in fine print, hidden in legal codes, and designed to make billions vanish from tax sheets like smoke. But here's the thing you won't hear at those yacht parties. Every single trick they use is perfectly legal. How did we build a tax system where the richest people pay the least? It starts with a simple truth that'll blow your mind. Rich people don't actually make money the way you do. While you get a paycheck that gets taxed immediately, billionaires make their fortunes through stock that just sits there, growing like a financial garden they never have to harvest. Think about it. When Tesla's stock price rockets up and Elon Musk's net worth jumps by $50 billion, he doesn't pay taxes on that gain. It's called unrealized capital gains, and the IRS treats it like monopoly money until he actually sells. But here's the kicker. He never has to sell. Instead, Musk walks into JP Chase with his Tesla stock as collateral and borrows against it. The bank hands him hundreds of millions in cash at dirt cheap interest rates. And loans? Loans aren't income, no taxes. Meanwhile, his stock keeps growing, easily outpacing whatever tiny interest he owes. This is called buy, borrow, die, and it's the holy grail of wealth preservation. Buy assets that appreciate, borrow against them for spending money, die and pass everything to your heirs with a clean tax slate. When these billionaires die, their heirs get something called a stepped-up basis. If dad bought Amazon stock at $10 and it's worth $3,000 when he dies, the kids inherit it as if they bought it at $3,000. All those decades of growth vanished from the tax books forever. Larry Ellison has mastered this playbook. The Oracle founder has borrowed over $13 billion against his stock holdings, while his wealth compounds tax-free in the background. When he dies, that stepped-up basis will save his heirs roughly $50 billion in taxes. But that's just the appetizer. The real feast happens inside something called a trust. Picture a legal fortress where billionaires park their assets, managed by armies of lawyers who've turned tax avoidance into an art form. Take the Grantor Retained Annuity Trust, or GRAT. Sounds boring, right? That's the point. Here's how it works. You put rapidly growing assets into the trust, then pay yourself a fixed annuity for a few years. If the assets grow faster than the IRS's assumed rate, which they almost always do for tech stocks, the excess growth passes to your heirs tax-free. The Walton family has used GRATs to move over $100 billion out of their estate tax reach. Mark Zuckerberg put 33 million Facebook shares into a GRAT when they were worth just 30 cents each. Today, those shares are worth over $13 billion. The tax bill on that transfer to his heirs? $0. Then there's the Charitable Lead Annuity Trust, or CLAT. You put assets into a trust that pays a charity for a set number of years. Whatever's left goes to your heirs. But here's the twist. You get to deduct the present value of all those future charitable payments right now against your current taxes. The Lauder family used CLATs to pass $1.3 billion to their heirs while claiming hundreds of millions in tax deductions. They funded their own family foundation and still kept the wealth in the family sphere. But why stop there when you can go global? Enter the Bermuda Triangle of tax avoidance. Not the mysterious ocean area, but the very real corporate structure that makes profits disappear across international borders. Google pioneered the double Irish with a Dutch sandwich. No, that's not a menu item. It's a tax strategy where intellectual property, your patents and trademarks, get shuffled between subsidiaries in Ireland, the Netherlands, and Bermuda, like a shell game designed by tax lawyers. Here's the magic trick. Google's search algorithm, worth hundreds of billions, officially lives in Bermuda, where corporate tax rates hover near zero. When you click on a Google ad in Kansas, that revenue somehow ends up being earned in Bermuda. The result? Google's effective tax rate on foreign profits was just 6.5% from 2007 to 2016. Apple took this game even further. They created a company that exists nowhere. Literally nowhere. Apple Operations International was incorporated in Ireland but managed from California, making it a tax resident of exactly 0 countries. This ghost company held $29 billion in cash and paid 0 taxes to anyone. But the real genius move happens when these companies bring money back to the U.S. Instead of paying the full corporate tax rate, they lobby Congress for special repatriation holidays, where they can bring foreign profits home at deeply discounted rates. Now you might think, okay, these are massive corporations. What about individual billionaires? Meet the family office. When you have over $100 million, you don't just hire a financial advisor. You create your own private bank, staffed with former Goldman Sachs executives, tax attorneys, and investment managers whose only job is protecting your wealth. These aren't your neighborhood H&R Block offices. Family offices manage $6 trillion globally and operate with the secrecy of the CIA and the resources of a small country. Some employ hundreds of people across multiple continents, all dedicated to one family's financial empire. Inside these offices, wealth managers deploy strategies with names that sound like military operations. Variable prepaid forward contract, basket option, tiger swap. Each one designed to transform taxable income into something the IRS can't touch. Here's how a variable prepaid forward contract works. Say you own $500 million in Facebook stock, but want cash without triggering capital gains taxes. An investment bank gives you $400 million up front in exchange for a promise to deliver Facebook shares years later. Technically, you haven't sold anything yet. No sale, no taxes. Here's one that'll make your head spin. The Charitable Remainder Trust. A billionaire donates stock to their own charity, takes a massive tax deduction, then pays themselves an income stream from that charity for life. When they die, whatever's left goes to charity. Except they've structured it so the charity is run by their kids, who pay themselves generous salaries to manage it. It's philanthropy that somehow makes you richer. The most audacious move? Some billionaires are renouncing their U.S. citizenship entirely. Eduardo Saverin, Facebook's co-founder, gave up his American passport right before Facebook's IPO, saving an estimated $700 million in taxes. He moved to Singapore, where capital gains taxes don't exist. Between 2008 and 2016, over 30,000 Americans renounced their citizenship, many timing their exit with major liquidity events. The U.S. government got so frustrated they created an exit tax for wealthy expatriates. But even that has loopholes. Others take a different route. They simply move their money while keeping their passports. Private banks in Switzerland, Monaco, and the Cayman Islands manage an estimated $32 trillion in offshore wealth. That's nearly twice the size of the entire U.S. economy, sitting in accounts designed to be invisible to tax authorities. But here's where it gets personal for you. Every dollar these billionaires don't pay in taxes is a dollar that comes out of infrastructure, schools, and services that regular Americans rely on. The Tax Justice Network estimates that $427 billion in tax revenue is lost annually to offshore tax havens. That's enough to fund the entire Department of Education for 3 years, or rebuild America's crumbling bridges, or provide universal pre-K education. Instead, that money sits in Zurich bank vaults and Bermuda shell companies. The numbers get even more staggering when you zoom out. Gabriel Zucman, a UC Berkeley economist, calculated that if billionaires paid the same effective tax rate as working-class Americans, the federal government would collect an additional $175 billion annually. That's not theoretical money. That's real revenue that could fix real problems. Meanwhile, the IRS keeps cutting audit rates for the wealthy while increasing them for working families claiming the Earned Income Tax Credit. In 2010, millionaires faced audit rates of 8.4%. By 2019, just 2.4%. The IRS openly admits they audit poor families more often because it's cheaper and easier. Think about that for a second. The tax agency audits a single mother claiming childcare credits more aggressively than they audit someone with a $500 million art collection stored in a Delaware Freeport. The system isn't broken. It's working exactly as designed. From that Monaco yacht party to your kitchen table tax prep, we've built two completely different financial realities. One where wealth grows tax-free in offshore trusts and legal loopholes, and another where every paycheck gets picked clean before you even see it. This isn't ancient history. It's happening right now, every quarter, every tax season, every time Congress debates tax reform. The billionaires aren't cheating the system. They're using it exactly as their lawyers and lobbyists designed it. But knowledge is power. Understanding how the ultra-wealthy play this game changes how you see every political debate about taxes, every proposal for tax reform, and every promise to make the rich pay their fair share. The next time you hear about a billionaire's effective tax rate being lower than a teacher's, you'll know it's not luck or accident. It's architecture. Will we ever close these loopholes? That's a question worth millions of votes and trillions of dollars. Drop your thoughts in the comments. Should this shadow tax system exist, or is it time to rewrite the rules? If this deep dive into the billionaire tax playbook opened your eyes, hit that subscribe button for more stories about how money really works behind the curtain. Because once you see how the game is played, you can never unsee it.